Hello and welcome to Explain It to a Comedian. I'm Sammy Obeid.
I'm Dhaya Lakshminarayanan.
And I'm Alex Wagner.
We're comedians. What do you do?
I'm an academic, so in some sense the opposite. But as an academic, I deal with things that comedians also deal with, things in daily life, but also the big topics of life.
What's the big topic that you're thinking about now?
Right now, I'm thinking a lot about how humans impact the world and how the world impacts humans, in particular, the issue of biodiversity. So the variety of life on Earth is on my mind. I didn't tell you that I'm a finance academic, so that I'm actually interested in financial markets, not the natural science of biodiversity, but how financial markets look at biodiversity and other issues in environmental sciences.
And how did you get into biodiversity being a finance professor?
So one can always ex post come up with reasons for why one does something, in particular in academia, that's often the case. This was serendipity, frankly. I mean, it just so happened that this issue was on my mind for a little bit. If you read the news, it's hard to miss the topic that we've been losing species, we've been losing corals at an unprecedented pace. So it's always been there, and for many years it's been on my mind. But to actually start working on it then took the rather haphazard event that I talked with a colleague of mine, Arthur Petit, and then I spoke with another colleague, Zachariah Sautner and Alex Garel, and so in the end we ended up working on it. So that was unplanned, but it suddenly started. If I go back further,
yes, please
I can explain it in a much more rational way.
Start from when you were born.
At that time I didn't think about biodiversity. I have to admit that, but I'll start halfway. Okay, is that fair enough? So halfway in, approximately, maybe a little bit more, but okay, let's not go there. But halfway in my doctoral studies, I had a fantastic teacher of environmental economics called Marty Weitzman, who unfortunately passed away much too soon. And he actually wrote about the economics of biodiversity, which was a very weird topic. At that time, we were scratching our heads, looking at these papers, and it seemed really weird. You get taught microeconomics and indifference curves and budgets and macroeconomics about, government policy and all this stuff. And then this guy comes along and talks about biodiversity. Very strange.
Yeah. Where's biodiversity on the balance sheet? You can't find it.
You can't find it, and maybe that's exactly the problem, right? So maybe many issues in environmental economics or in the environment broadly have to do with the fact that there's no accounting for them.
There's no accounting.
Accounting is really like a super boring term to many people, but in the English language, to account for something or to be accountable for something also means that you at least have it on top of your mind and it influences your decision making. And so I think the value of that research really is, and that was in the 1990s that he did this research. I did my PhD in the 2000s, so it was already out there. The value of this is that it brings to the fore, hey, there may be an analytical way of thinking about biodiversity. But it took now 20 years for this to enter the discussion of financial markets, which is where we are trying to contribute.
Nice.
So biodiversity clearly is of interest to you. Can you tell us why it should be important to us and why we should care about it?
Yeah, so I think you have to start maybe from the point of what is biodiversity, right? So that may be helpful to briefly explain. As with many big concepts, there may not be a unique definition, but let's start with the simple one, the variety of all life on
What's the deal
habitats.
with biodiversity?
What's the deal with it?
Yeah.
That's a good way of framing an economic question. I like that. Now, there are ways in which biodiversity, so this variety, helps us directly, and there are ways in which it helps us indirectly. So a direct benefit, for example, is that the presence of bees and different kinds of bees helps with pollination.
Oh, sorry.
Yes. And it also creates more stings, but that's a downside, right? There's always costs and benefits for economists.
Right.
And pollination is very important. Without pollination, we don't have apples. Right? Very simple. I'm exaggeratingly simplifying here, but the direct line in principle is if we don't have pollination, then we are not having many kinds of the fruit that we are used to having. That's a direct benefit. Right? Another direct benefit, just to give another example, I mentioned corals earlier. So coral reefs suffer from increasing heat. And if you read the news, we've actually had a very bad year for corals in many places. In other places, they're coming back, but younger corals probably are not so strong like the older corals. That's a natural science discussion that I'm not so well versed in, but it's an issue. Anyways, what are corals good for? The most direct benefit that is on many people's minds is, oh, well, corals are really nice because there's lots of fish around them and you can snorkel and you can swim. Yeah. So tourism is there.
Yeah.
And actually, I mean, that's a little bit narrow, but tourism is a really important economic activity. And for many countries, that's an important source of income. And for many people, it's an important source of their livelihoods. So I wouldn't totally deprecate that. But there are other more important aspects. And you asked a short question, I'm giving a long answer because there's so much going on here. Without corals, we get more extreme floodings because they act as a protection against strong waves. And so there's physical damage also likely to happen more if we lose the corals. I've talked about two direct benefits, there would be many more, I'll give you, but the other way of thinking about biodiversity is as the option value. So
what's an option
what's
value?
An option value?
Yeah.
That's the possibility
yeah.
to use something in the future which you don't necessarily use today yet. So my father always, I'll do a little bit of a detour here, but my father always drove my mother crazy by saying, hey, he cited Umberto Eco, saying, hey, the value of a library is in the books that you haven't read, because he loved to buy books. And she thought, okay, can we please not have books lying around everywhere, and why are you spending so much on books, basically? With biodiversity, you can have a similar metaphor. It's not my invention. It goes back to Marty Weitzman's and Andrew Metrick's work. A species is effectively a library. And the individual genes, or the DNA, are the books. And so there are many ways in which, through randomness, new genes, new DNA offsprings exist, and suddenly out of a library you get new ideas. So to come back to biodiversity, what happens with biodiversity, many of the food variation that we get, many of the medical variation, innovation that we get, comes from random variation in the environment. If we don't have that, then we lose out on an important source of our own well-being. So that's why keeping biodiversity is important. And of course, the question I have to ask as an economist, what are the costs and benefits? That's not an easy one to answer. The other question that I'm more interested in now is, how does the financial market look at this? And how does it in particular look at what companies do in this space? Because it's so difficult to figure it out, what are the overall costs and benefits, that the financial market may be a useful way of gauging how much we should care about this topic.
Yeah, pretty is not really quantifiable when you're talking about corals and bees and species.
I mean, you can try to rank it, right? I mean, why does the bald eagle in the US rank so highly on people's species to retain? It's not because the bald eagle is that important.
He's on our money, that's why.
But it's on the money. He's on the money, or it's on the money. And people just like large animals. Also, large mammals get a boost of support, right? If you want to ask people, are you going to donate $100 for a rhino, or are you going to donate it for a bug you can't even see, even though that particular bug, or a nasty bug, but that bug might actually be much more beneficial in terms of the variety. So we cannot ask people, what do you want to retain? Because then we'll get all the large animals, but not the ones that we need for the variety.
large animals are more lovable than small bugs.
In many instances, unless you're standing right in front of a rhino
Yeah,
and it's
rhino.
about to run you over,
I'd rather
then
get
you're.
bitten by a bug than a rhino.
I haven't tried the rhino part, so but I suspect it's true.
So just to recap, we should care about biodiversity because of apples and waves.
Apples, waves, and the unforeseen. That's that third part.
The
So the
option
first
value.
two are examples of direct benefits, and there are a bunch of others there, which we can't go in now for time. But then there's this large part which we don't know about. But giving up that option, I on purpose use this financial term because it has an economic value to it. We may not know how much it is worth, but in many ways that's precisely why we have to invest in retaining it.
Now, if a company has a decision to make, and one decision makes them profits in the near term, but it's bad for the environment, it harms in some way biodiversity, should they choose that? Because we know that companies need to operate based on their bottom line.
Yeah.
There's of course an ethical concern. If you want to do good for the world, you might choose the option that's favorable for biodiversity. But do you have an argument that actually doing the right thing for biodiversity is actually good for that company in the long run?
Yeah, so there's important layers to this argument. What is the responsibility of a company? The classic answer, going back to Friedman's argument, is, well, the business of business is business, and let's not ignore those problems of environmental issues, but let's let the government deal with them. The government is better in dealing with this. Let's let the companies deal with what they know best, which is to run a business. That's one argument. Now, I think it's fair to say that this has proven to be a little bit short-sighted in a number of ways. First, the government isn't always that good in fixing things either, right? So it becomes a trade-off of who is more suitable, and that may depend on circumstances, but it's not like in general we can rely on the government to fix things. Depends on who's in power. Ultimately, the government also, at least in democracies, is and should be responsible to the population. And sometimes the population just is made up of people who, in majority, don't like certain policies that would be good for the world, right? So it's the same in my home country in Austria, right? I mean, we don't even talk about environmental issues. Let's talk about pension reform. Pension reform would be important. Who's voting on pension reform? It's the people who are about to benefit from no pension reform. So there you go. So the government isn't the solution either. The companies might benefit directly from doing the responsible thing in two ways. One is because shareholders might say, hey, look, we actually have preferences ourselves that we want to retain biodiversity, that we want to avoid further climate change, and so on and so forth. So if a company does that, then we're more willing to invest in that company, bidding up the share price of that company, and maybe managers care about that. The other dimension is that for companies, it can actually be quite costly not to do things if regulation in the future comes. So this is, of course, a little bit of an indirect argument, right? You're doing it you're protecting biodiversity, you're trying to minimize your footprint, not because you care so much about apples and waves and the option value, to name the three things, but because you're afraid of the regulation. So one could say, yeah, that's not a real motivation, but it could be a very powerful motivation nonetheless if you try to avoid the regulatory risks as a company. And so actually, in our research right now, we are trying to figure out how do shareholders value that footprint of a company? Do they worry when a company has a large footprint or not?
Let's move
Precisely
into
to
that.
have that.
Tell me, what is all of this that we're talking about called sustainable finance? And is that a bad word? And also tell us a little bit about your research.
So the first answer, yes. Second answer, I'm not sure. Second question, I'm not sure. It's a bad word. And I'll tell you about the research, okay? So it's sustainable finance, and by sustainable finance we mean all the work that's done in both finance academia but also in practice. There's a lot of useful work done in practice that has to do with how financial markets or investors, either equity investors or also lenders like banks, think about sustainability issues and how they act according to them. Right? An important tenet, an important point in economics and finance is that you gotta look, do people put their money where their mouth is? And there's a lot of talk about doing good in the world and about behaving more sustainably and so on and so forth. And at the end of the day, what counts is where does the money flow? And so sustainable finance tries to shed some light on that. That's kind of the research agenda of sustainable finance. Biodiversity as a topic within that is relatively new. There's been a lot of research in the last 20 years on climate finance, and the two are related. There's other topics in sustainability like worker welfare. There's the issues like diversity. There's issues like responsibility and ethical behavior and so on and so forth. But biodiversity is what we started talking about, and that's also what the current research I'm spending a lot of time on is on. So the deal here is to try to figure out, or one approach that one can take, and that's the one we use, is try to figure out, do firms who have a large footprint on the world in terms of destroying biodiversity, do they get punished by investors? Do they get rewarded, or do investors not care about that? Right? And there's arguments for either of the three. Right away, we have to talk afterwards about, well, how the hell do you measure
Please tell us
what a company does? But let's maybe posit that for a second and just try to have the big picture. Suppose we can measure. Okay, Sammy Enterprises does one, Dhaya Corporation does the other, and Alex Incorporated does something also in the environment. How can somebody out there who's an investor figure out what we do with biodiversity in terms of impact? That's one question we have to come back. But then the other question is, whose share price is going to be largest? You're going to be the cleanest, you're in the middle, I'm the one that has the largest negative footprint. Which of us are investors going to like best? That's kind of the question we're trying to answer here.
Right.
And the way we do it in research is we can look at the stock price development of firms. So we're not going to ask people, oh, which company do you like better? But again, by this principle of putting money where your mouth is, seeing where do share prices actually appreciate the most.
Can you name names?
So one company where we do in our paper, where we get the information from the data provider that we use on the corporate biodiversity footprint is Danone. It's a company that is a dairy manufacturer. And so I cannot tell you, and not because I don't want to, but because I cannot tell you in the specific case how the shareholders look at that company, but I can tell you how on average the investors look at the share price development of certain companies of that caliber. And so with Danone, let's talk about the measurement first. It may make more sense to talk about that. With Danone, you have a dairy producer. We all consume yogurt. Most of us do that. Where does the yogurt come from? Well, it comes from cows, because cows produce milk. Sheep also produce milk.
Goat also.
Goat also, but let's talk about cows. It's the vast majority of the milk that's being produced. Now, cows need to feed somewhere. They need land. So there's a lot of land use to produce dairy. What the name of the game here in this biodiversity literature is, and it's at the beginning, so nobody has the right answer, it's just all estimates, is trying to estimate, well, to get to one yogurt, you need so much milk, and for so much milk, you need that fraction of a cow, and how much land do you need for the millions of cows that Danone uses ultimately to get to the yogurt it produces? Cows, using this land, you have degradation of the land. So you go from the pristine state of the land to a less beautiful state, a less diverse state. The concept that natural scientists use here is the mean species abundance concept. So how many species are there on average in that plot of land. And natural scientists have also estimated what the impact of a certain activity is on that mean species abundance. So knowing that we are having cows in a certain area, there's still going to be some other animals around, right? There's going to be some insects around and so on and so forth, but there's going to be less than if it was pristine grassland before. So that delta is the impact that happens in the supply chain of Danone. And adding all of that up, according to the data that we use, leads to an impact of Danone of, I'll tell you the number, 10,000 square kilometers mean species abundance. So what does that mean? What does that number mean?
Did you come up with this?
We didn't come up with the number. That comes from a data provider, but I can give you this particular number because they've provided us with the calculation that underlies it to some extent at least, and it's also in the paper, so that's public information. This 10,000 square kilometers, how big is 10,000 square kilometers? First of all,
bigger than a rhino.
It's true. It's a good way. Maybe we should calculate how many rhinos fit into that.
Yes.
But I can tell you it's a quarter of the size of Switzerland. So that's, I mean, you can.
How many rhinos fit in Switzerland?
How many? That's a great question. I'll ask my students that on the next exam.
Wow.
That's
They'll blame me. Thank you.
I wonder whether ChatGPT can figure out the answer to that question. Probably can.
Certainly
He certainly can, no, surely. That's an almost trivial one for it, although it has troubles with calculations still, even now. Anyways, 10,000 square kilometers mean species abundance impact means that on average, in a given year, through the activities of this company, on this area, biodiversity is not coming back because they continue to use the land, is not coming back to its pristine state from the state of degradation where it is. Okay, so that's a kind of maintained impact. It's not like they're cutting down 10,000 square kilometers of wood every year. They're using the same area, but it's not coming back. That's kind of the impact that they have. Then there are other kinds of impact where you actually do destroy some new land. If you expand, if you have more revenues, you gotta have more cows, and therefore the suppliers have more cows, and therefore you're gonna use land more. So the name of the game here is, through these activities, how much revenues do you have in the area, impact on land use, for example, to compute up and aggregate up what is the impact of a given company in a given year. And so then we have, for around 2,000 companies, we have this number. 10,000 in the case of Danone, 2,000 in the case of another company, 500 in the case of another company, and so on and so forth. And so now the question is, well, do investors care about that? What do you think?
Some investors do.
Aha.
I would say, do ESG investors care more, or do mainstream, like pension funds, care?
Okay. What do you think, Sammy?
I think the same. I think there's going to be a handful of investors who are really into the fact that a company has a small footprint. But I would guess the majority of the investors are just looking for the bottom line.
Okay, cool. So there's a couple of concepts that are useful here. So when one looks at share prices, right, the interesting thing about share prices is what matters is not necessarily what the average thinks or does. What matters is what the so-called marginal investor does. So the investor who is just the last person, or sometimes it's an algorithm, that makes the trade, because that is what moves the share price. It's a very interesting concept. The average is sort of not showing up in the price anymore. And so in some sense, we're pushing the can down the road by asking, trying to get to your responses, which I can understand. Well, is the marginal investor an ESG, environmental, social governance, motivated investor, or not? We don't know the answer to that because we don't observe the traders, but we can observe the share price moves. And so what we find is that over the long period, the 4 years that we can observe this corporate biodiversity footprint, it's a relatively new data set. On average, it's not correlated with the returns. So on average, accounting for other factors that also move share prices, like the size of the company, how profitable is it, and so on, it doesn't show up. But in the last approximately 1.5 years, it does show up. But in which way does it show up? It shows up as companies with a large footprint, I'll put it bluntly, destroying more biodiversity, they have higher returns. So intuitively, many people might say, hey, shouldn't the companies that are good for the world, if anything, shouldn't they have higher returns? But this is one of the features about finance, which is, I think, important to get, and that's where the public, I think, has some learning to do. The way it works is the financial market sees these companies arguably as more risky. And therefore, those companies have to deliver higher returns. They're higher risk now recently. Why have they become higher risk? Because there is regulation about to come, even in the biodiversity space. But there's regulatory uncertainty. We don't know what it will look like. One of the major moves forward recently, there's two major moves forward, I think. One is the so-called Kunming-Montreal Declaration on Biodiversity. That's an international agreement. And the second one is the Task Force for Nature-Related Financial Disclosures. These are all awful terms, but that's what we have to work with in these matters. There is now a push for a clear understanding, I think, among policymakers worldwide that more activity in the space of biodiversity is needed, and investors are beginning to realize, hey, this is a risky thing if you have a company that has a large impact. And so those companies are now beginning to have higher returns. At least on the short period of data that we have, that's what's beginning to show up. And in some sense, that's a good thing, because it says, aha, investors are beginning to worry about this topic, and they're waking up. The cost of capital for those companies is going up, and so maybe they're going to do something about it.
We got a signal to wrap up a little bit, but I'll go to Sammy if you have anything that you want to say before we go to wrap up.
Yeah, so you know what you said was it was a lot. It was a lot, and I understand what you're saying, but I don't see. What would you tell to companies or decision makers who are considering making moves that are more conscious of biodiversity but aren't sure because it might affect their profitability? What would you say to them? Would you just say, well, just do you, or would you try to save the world?
I think you can do both. You can make a reasonable business assessment about the benefits and costs of engaging in biodiversity issues. You have to account for the regulatory developments that I just mentioned. It would be, in fact, a violation of the fiduciary duties of the officers not to take account of that. So the regulatory thing is the clearest one, and that always gets managers, right? If they are afraid that regulation is going to hit them, then they get going. Maybe that's the only way the world can work here. But I also think that there is a case for companies to have a good impact or a lessened impact on biodiversity and still be profitable with it. I'm actually more worried about the case where companies overdo it, where they start claiming that they are so green and so biodiversity beneficial and so on and so forth. Everybody tries to do it, that it's going to be hard to tell apart the ones who actually do it and the greenwashers, because that is a real problem. Greenwashers. Yes, that's a real issue, I'd say, in biodiversity. So the incentives are clearly there to do something good, but the incentive is even greater to pretend to do something good and not really do it. And so that is, I think, where, again, regulation is ultimately also needed to some extent to differentiate between those two.
So you would advise them to pretend, at least start by pretending, and then fake it till you make it.
If you believe the second part, that you make it, then it can be good advice. I think the problem is many will stop at the faking part. So I wouldn't go down that slope. I would really start with make it. Just do it. And that will be...
Just do it. That's a new slogan.
I
wonder
think
what their biodiversity footprint is.
Must be really good.
Do you have data on that?
we have the company in the data, but I can't say.
Okay. Wow.
Just do it.
But just do it, just to clarify, I have to hedge that a bit. It has to be economically in the framework that the company operates in. You cannot violate the other duties that you do have as a company. But the point is, like with climate change, if you didn't do that, or those companies that got into it early on, they actually were rewarded by the market. We may be running out of time here, but just briefly, when Donald Trump was elected president in 2016, it was climate responsible stocks that benefited at the election. It was not the dirty ones, the ones that don't do anything. It was the ones that are climate responsible, we show, because long-term institutional investors anticipated that there's going to be a low level of climate regulation for a time, but then there's going to be a boomerang coming later on. And so you actually got an advantage as a climate responsible firm for being there early. And I suspect something similar might happen with biodiversity. It may not seem like an absolute necessity now, but you sure are likely, I don't know the future, but you're sure likely to look pretty stupid if you didn't do anything now 10 years down the road as a company.
We have to wrap up, but we'll stop and we'll get more questions. But is there something that you want to leave us with, both in terms of your research specifically and also on this general topic of sustainable economics, sustainable finance?
I think the most general point that is, I think, useful for the public also, if I may say so, is financial markets can be a useful information source. So many people, I think, among my friends who have hands-on jobs and do important things in real life, they perceive financial markets as something where, okay, there's a few rich people who gamble on one side or on the other. Some people do, sometimes you win, sometimes you lose, and that's it. It's all speculation, and there's nothing real happening there. But this sort of research that I've described to you, and many other pieces of research very many people do around the world, actually highlight that financial markets play an important role because they give us prices. They say, okay, this is worth this much, this is worth this much, and prices then lead to what we call resource allocation. So they indicate, it's actually useful to go this way or that way. So the role of financial markets for helping society overall should not be underestimated. It can be a very useful gauge for anticipating problems, also as an early warning sign. If you look, just briefly as another example, in COVID, in the COVID crisis, in the crisis days of February, March 2020, it was the financial market that highlighted very quickly, hey, this is not just a financial crisis, but we're going to have troubles with highly leveraged, high debt companies much earlier than the financial press really started talking about it. And so that was how policymakers could intervene pretty quickly. That's just one example how the crystal ball of a financial market can be really useful. I think for biodiversity, climate issues, other sustainable finance issues, that's the big message here. The financial market is our friend. It's not our enemy in terms of thinking about how we get to a better world.
Thank you so much for joining us. Financial markets are your friend. Anything else you want to say?
I think that's a nice closing word.
Great, wonderful.